Hi there, Serial Trader here. Let's have a look at the major US indices, and we'll start off here with the wave chart on SPX. And alright, so now there's been enough price action since the last video to do an update. So we invalidated that rough wave count I was working by overlapping with this level, which was at 26.2152. Today we went as high as 26.2576. So that invalidated the 1, 2, 3, 4 coming down in 5 interpretation for this particular price action, since we had that December 3rd high at 2818. Sorry. But that does not change this to a bullish outlook, in my opinion, at this point. And in fact, it actually might be even more bearish, believe it or not. So bear with me here. So just doing swing high to swing low. So the December high that we started this decline from to the December low we made there, doing a fib pull from there. We came up today and basically just about touched that 618 relationship. So the golden ratio, the 61.8%. That came in at 26.90. Today we went as high as 26.2576. So just about there, basically within a point or so. We also had the equality relationship between this initial leg up from this little pullback here to this subsequent leg up, and the equality relationship came in at 26.1765. So we're basically right there, and you can also see we've still remained below the zero line on the daily MACD. So according to that indicator, the trend is still technically down. And you can also see we've come up into this RSI bear market resistance zone. And just to go over that quickly. So in a bear market, you get oversold on RSI on the daily chart here. When you have a corrective rally, you get into that resistance zone between 50 and 60. So this particular one, this bear market rally got us to 56 on RSI. This one got us to 58. Currently, we're at 55. So right in between 50 and 60, that bear resistance zone. We're right there at the moment, and that would fit well with the previous corrective rallies we've had. Just like in a bull market, you get overbought and then you pull back into a bull market support, and that's the range between 40 and 50 on the pullback. So in this case, it's kind of the inverse of that. Now anyways, so if this is true, if this is the correct interpretation, which it certainly could be, then we're going to be looking down here soon. If today was a nice pivot, which it could have been, we're going to be looking down here at a third of a third decline, which could get us, if we just do a 1618, I believe that's where I roughly place this here, get us under 2,000 there in fairly short order. So we'll see. We do have this long-term uptrend line, and hang on. Let me just kind of show the layout for this potential decline. So the layout here would be we have a pivot either now or very soon, and then we come down in 3, up in 4, down in 5 for that larger 3, then get a larger 4, and then a larger 5 down, and then that'll complete kind of this initial macro leg down, and then after that you'd have some sort of more significant corrective rally once again. So that's kind of the roadmap I'm working with currently. Also point out, we'll just get to kind of the bigger picture. This yellow line, I still like the idea that we're going to go down and touch that at least. And that's just that uptrend line connecting the two significant lows there from 2009. So that comes in right around that 2300 level, just under 2300 perhaps. So that's kind of a magnet, in my opinion, to come and touch that, even if it is going to continue upwards afterwards, although I don't think it will. We shall see. So yeah, I like that. I like that we're in this area of this equality relationship and the golden ratio. And also, before I go to the smaller time frame, which I want to show, throwing this on a daily close only, and this is one thing to keep in mind. So when R.N. Elliott observed all these wave patterns and cataloged them, and created some rules and guidelines around them. He was only using daily closing price data to come up with all this stuff. So I'll point out that on a daily close only chart, this could still be a 1 up, 2 down. This could be 3. This could be 4, because we haven't overlapped on a closing basis here on SPX. And really, you just had this. Let's see if I can just highlight this kind of a zone. Okay, that's what I wanted. So yeah, here I'm just having a kind of a zone. This was on a closing basis. This kind of was our support shelf. So you had this 2640, 2635, kind of low 2600s as a support shelf. Okay, and now we're just coming up, not even quite in on a closing basis, not even quite into that former support shelf, looking to become resistance. So you got to keep things in perspective here, and looking at closing prices can sometimes aid in doing that. But that being said, I do still base the overall analysis on all the price data available. So the intraday as well as the closing. Now that being said, I think we're done with this time frame. I think I've said what I need to say there. So we'll go to the smaller time frame, and let's have a look at this. So smaller time frame, and this is the same chart, just zoomed in on the hourly here. So we have that larger 1, 2, and now potentially 1, 2 of that larger 3 that we're coming down in, potentially. And here are the subdivisions. They're not the prettiest, but they do work. So you have 1 down, 2 up, 3 down, 4 is a little small for my taste, but it works. And then 5 down for minor 1. Then you have W, X, Y up for minor 2. And then obviously looking anytime now to pivot down in minor wave 3. And, come down here, right? So a couple things I want to point out, though, on the very, very short-term patterns, because I think they're potentially helpful. And, well, before we do that, we do still have a nice RSI bear market, RSI bearish divergence. So you can see RSI made lower highs as prices kept creeping to higher highs. The MACD moving averages made lower highs as prices creeped to higher highs. So that's a signature you want to see when you're looking for a turn. So that's there, check mark there. Now let me go in closer here, maybe the 15-minute time frame, just to show you. We did a couple little triangles here, and that's good information. So we did a triangle here, A, B, C, D, E. We came out of that triangle, and then that implies the triangle precedes the final move in a sequence. So after this triangle, we expected one more 5 up. And let me just grab the tool out there. So we had our 1 up, 2 down, 3 up, another triangle, smaller degree, wave 4, and then up in 5 to finish the move. So a triangle thrust, and then a triangle thrust at the end of the triangle thrust of a different degree. And let me just adjust this degree of labeling down appropriately. Let's see here. Okay, that should be good. So we have triangle, which implied one more 5-way move up to finish the move, and then we have 1, 2, 3. We have a triangle within that 5-way move for the 4th wave, up in 5, and now starting to come down fairly decisively towards the end of the day. Now, obviously, we want to start breaking some more significant support levels and start doing little 5 down and 3 up, 5 down and 3 up kind of pattern. But this is the first thing you look for, especially right off that golden ratio up there, just right off that 618 at 26.26. And remember, fell just shy of it at 26.25.76. So a little bit of a front run on that 618 by a point or so. I just thought I'd point that out because triangles precede the final move in a sequence, and especially when you have 2 different triangles of different degrees finishing off, multiple degrees of the sequence, then you get a reaction off that 618. That's starting to get pretty exciting here to think that we might have a major pivot. Now, obviously, on this chart, back to the hourly here, On this chart, you'd want to see us get below the lower boundary line of this corrective price channel we've been in. That would be a good an early sign. Obviously, start breaking some of these initial support levels. The one I'm really looking at here would be 25.6202. Getting down out of this channel and breaking below that would be a pretty good sign that we're really rolling over again. So I'll be watching that carefully. So I thought I'd just show that on the hourly. And now I just want to play a bullish advocate. So what if I got it totally wrong and we have a major, tradable bottom here at the end of December, or near the end of December, and we're just starting the very beginnings of a new larger degree bullish trend. Well, okay, let's pretend that's happening, and let me do a very poor job of forcing this to be a 5 waves up. Okay, so let's pretend this is the case, and we just did a initial 5 wave move off the bottom, and of course this looks terrible. I mean, wave 3 is shallower in slope than wave 1. I believe it's also shorter in length. Let me see here, just to double check that. Yes, it is. So shallower in slope and shorter in length, but really trying to force it here. So let's pretend we got a 1, 2, 3, 4, 5 up. Technically, it's not overlapping if I count it this way. So even if this is the case, and we just did our first 5 wave move off the bottom to start a new bull trend, if that's the case, and I don't think it is, but let's say it is, we do a fib retracement. Obviously, we're going to need some sort of a wave 2, right? So I'll throw up some fib levels. Let me also just show that, yeah, 5 up for a larger 1. Then we need a 2 down to between the 50 and the 618 would be pretty typical. Then up in 3, then a 4 and a 5 and so on and so on. If this is what's going on, which I highly doubt, but even if it is, and there we go, that still implies a nice corrective pullback down to this maybe former support level near that 618, and that'd be 2450 in that range somewhere. So that'd still be a sizable decline, and certainly a potential shorting opportunity. Even if we're not going to go test or take out the lows, it does still require us to come down and do a nice retracement and test some support levels. So even in the most bullish of scenarios that I can come up with here, by doing a very poor job of counting this, that still implies that any time now we're coming down in a fairly significant way. I mean, that's almost 200 points from the high to the low if we just got a typical 618 retracement. So that's certainly worth paying attention to as well. Now that's the thing, if we do come down, this will give us more information too, right? What happens now? If we do just come down in 3, find nice support, in the 618 zone here, or the 50, start coming back up, well, that could be another bullish trade setup. And I won't ignore that. If that happens, it's time to go bull, and go bull hard. But that's not the current expectation. But just something to keep an eye on. Always good to be aware that anything can happen, and you're just always trying to weigh what is likely happening and what is likely to happen, and trade around it, sort of thing. So I'll be keeping an eye on this alternate count, although currently not overly enthusiastic about it. Much more, along the lines that we just did a bear market rally, possibly completed today, or nearly so, and that we're going to be rolling over hard pretty soon here. But we will see. Now, one more thing before I go to the Thinkorswim candlestick chart. This is the futures chart. No labels on it, but this is the ES futures. And you can see we did a nice 618 retracement here as well. So from the December 3rd high on the futures to the December low, just a simple fib pull. 618 came in at 26.24. Went as high as 26.26. So again, within a couple points of just hitting that golden relationship. So that'd be a nice area to pivot here, looking at the futures chart as well. All right, with that, I think we're done here explaining the wave outlook. So we'll go to the Thinkorswim candlestick chart. Now, interestingly today, there's also a potential candlestick reversal signal, and right around that 50-day simple moving average, which gave us problems before on the previous corrective rally we had. So if we dig into that, you can see that we had a, if I get in closer here, you can see that we had a potential bearish reversal candlestick today, a gravestone doji, so a long upper wick, relatively small, I should say long upper shadow, relatively small lower shadow, and a small real body. So that's showing a rejection of those higher prices and just about off that 50-day simple moving average. So that's a nice, it's got a nice look to it as well. Obviously our daily oscillator very much in the overbought condition still, maybe starting to cross and roll over down. So that's certainly suggesting some weakness here as well. And obviously early signs, other than everything else I pointed out on the wave chart, would be getting back below the daily T line. And I'd like to see these support levels start to get taken out, you know, 25.70, and I believe I mentioned before 25.62. So that's what I'm looking for in SPX. Again, with everything else combined, the fact that we had a nice little reversal candlestick today, that could be a nice pivot. But we shall see. Okay, now we'll go to the Dow Jones Industrial Average. And on the Dow Jones Industrial Average, basically the same message. Didn't quite get to the 50 on the Dow. You know, the real body is somewhat larger here on the Dow, although it's basically the same message, a longer upper shadow, rejecting those higher prices. Don't really want to call this one a gravestone doji. Doesn't quite have the right look to it, but similar to what happened there on SPX. And again on the Dow, got to get below the T line, start taking out some support levels to get too excited about the downside. But it's got to start somewhere, right? Now on the NASDAQ composite, let's have a look at this. NASDAQ composite had a very nice gravestone doji. And you can see a long upper shadow rejecting those higher prices. Again, we're sitting right around this 50-day simple moving average. Although obviously we are a little bit above it. It's not an exact thing, but it's more of a, you know, an area to look at. Same idea on the NASDAQ. Got to get back below the daily T line. Start breaking some, you know, initial support levels. And stochastic oscillator looks like it's ready to roll over anytime now in the overbought condition. So that's the NASDAQ. These all just have the same look and implications to them, really. Now let's look at the VIX, because I think something may have happened of interest today on the VIX. So, okay, yesterday on the VIX, we had a doji, which is a potential, you know, reversal of this, you know, little downtrend we've been in. Obviously within the context of the overall larger uptrend that VIX is in. Now today we did a bullish engulfing candlestick, engulfing yesterday's, you know, doji reversal. So that's a left-right combo. That's a potential bull signal here on VIX, which is obviously a bear signal on the actual market. And nicely in the oversold condition here on the oscillator, maybe starting to curl up and ready to launch again. Also, not too far from the 200-day simple moving average that we bounced off of previously. So a potential signal here on VIX, although I'm not sure how much weight I put into candlestick signals on the chart of VIX itself, but worth pointing out anyways. So we'll see what happens here on VIX. Okay, now to cap things off, we'll look at the VIX VVIX tool. And there's been a few false starts, but none of them were actually confirmed signals. So at no point did we actually get below this blue moving average yet on the SPX chart. And that would be what it would take to confirm the signal. So we had a couple instances here where VVIX got below its red moving average, but SPX did not confirm by getting below the blue. And then we've, you know, come back down here on VVIX. But we're close to getting back above the red moving average on VVIX. And then after that, we'd be looking for confirmation by SPX getting below the blue moving average, which is currently not too far away. It's caught up quite nicely with price. Currently sitting at 25.96, so just below 2,600. So that's what we'd be looking for now. We do still have a bit of a divergence there on VVIX and VIX. So that's what we need to see before we get above the red moving average and then below the blue moving average here to give us a confirmed SPX sell signal. But as of right now, no confirmed signal yet, so I'll just leave it there. And as far as my positions, no changes from the previous videos, so nothing to mention there. Still hanging on to those March SPY puts, also the February VIX calls. So obviously looking for this to start rolling over. Possibly today was the pivot, but we shall see. Tomorrow and Friday may either confirm or deny the current idea here. All right, that should be good for now. Serial Trader signing off.